All right, and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Here today to discuss a solo 401k, a powerhouse for tax and investment diversification. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Today, we're going to cover eligibility requirements, who qualifies for a solo 401k. We're going to talk about diversification from two angles. One, tax diversification. So, for example, pre-tax versus Roth and mega backdoor Roth. Investment as well. So, investment diversification, stocks, real estate, crypto, private equity, and more. We'll go through an example, and ultimately, the goal is to be able to educate you as far as how you might make the most of your solo 401k plan. Before we get started, we do see that there's a comment. Thank you for bringing the comment. We absolutely do offer the option to speak. We speak every day with our customers. Here's a link to our calendar. You can access it at mysolo401k.net/book. If there are other questions or topics, either on this topic or even off-topic issues to discuss, please don't hesitate to chat that over as well, as we do appreciate the chance to discuss topics. So let's dive into this discussion. Who qualifies for a solo 401k? Well, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees. You need to report self-employment income on your taxes. So, for example, in the case of a business that's taxed as a sole proprietorship, could be a informal, without a legal entity, or it could be a single member LLC that's taxed as a pass-through. That's going to be income reported on Schedule C of your 1040. Earned self-employment income in the case of a business that's taxed as an S Corp or a C Corp is going to be W-2 wages from the business. In the case of a business taxed as a partnership, earned self-employment income is going to be income reported on line 14 of the K-1 from the partnership. So again, the key is that you got that earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. Why choose a solo 401k? Well, it has the highest contribution limits for any defined contribution plan available to self-employed individuals. So for example, for 2025, you can contribute up to $70,000 or even more if you're age 50 or older. And if you have a plan like ours that allows it, you can make both pre-tax contributions that reduce your taxable income now in the year for which you make the contribution, or you can make Roth or even mega backdoor Roth contributions, which are made on an after-tax basis now. In other words, that doesn't reduce your taxable income for the year for which you make the contribution, but you've got that potential for tax-free growth. Moreover, with a truly self-directed solo 401k plan like the one that's offered by My Solo 401k Financial, you are the trustee. You have total control over the plan. You have total control over the investments. So let's again first talk about tax or diversification in terms of tax diversification. Then we'll talk about it in terms of investment diversification. So in terms of tax diversification, what's great about our plan is, as mentioned, you're able to make multiple types of contributions. In other words, you can make pre-tax contributions, so that reduces your taxable income now, or you can make Roth or mega backdoor Roth contributions. And you have the option to make all of one or all of the other, or you can do a mixture, or you could make one type of contribution one year, say pre-tax this year, make Roth and mega backdoor Roth contributions in future years. And so clients will work with their tax advisors to figure out the optimal strategy, right? So this is diversification in terms of saying, well, I'm not exactly sure what tax bracket I'm going to be in the future. Maybe I have an idea, but let me hedge my bets. In other words, maybe I'll reduce my taxable income now to a degree by making pre-tax contributions up to the applicable limits. And then maybe I'll make additional contributions as Roth contributions. So I've diversified from a tax perspective. Because when you make that Roth or mega backdoor Roth contribution, it's made as an after-tax contribution. But then you've got that potential for tax-free growth. So you're not reducing your taxable income now, but all the growth could be potentially tax-free, so that in the future you can take out that amount without having to pay taxes or penalties if you make it as a qualified Roth distribution. So that's the first way that the solo 401k plan allows for diversification, is by providing these tax diversification benefits. Now, the second way we can think about diversification is in terms of investments. And this is really true diversification. In other words, it's the maximum amount of diversification allowed under the law, because our plan allows for the maximum amount of allowable investment types. In other words, it is possible some clients will go and get a base Thanks for your patience as we seem to have lost the connection there for a second. Let's resume the discussion around the investment diversification options. Just the fact that the plan allows for really the most options in terms of what the plan assets can be invested in. It's not just limited to brokerage type investments, right? Of course, you can invest in brokerage type investments. You can invest in stocks, ETFs, mutual funds, but you can also invest in alternative investments, true alternative investments with checkbook control. So real estate, crypto, private equity, and you can have both. So again, just like we talked about, some folks will take a blended approach in terms of tax diversification, making some contributions as pre-tax and other contributions as Roth or mega backdoor Roth. But the plan also allows for true investment diversification, where some investments might be invested in traditional brokerage type investments, and other investments are made in more alternative investments like real estate, crypto, or private equity, just to name a few. So that leads really perfectly into the example that we wanted to cover, just the ability to diversify both from a tax perspective. So taking that blended approach, it could be in the same year or maybe switching between years. Using, for example, the mega backdoor Roth to maximize tax-free after, maximizing the pre-tax contributions. So just to put some more meat on the bones, right? The plan allows for multiple types of contributions: employee contributions, employer, and then mega backdoor Roth. So the way that the contribution limits work is that you can, for example, first make an employee contribution up to $23,500. Then you could make an additional employer contribution, which is going to be a percentage of the compensation. So let's say, for example, that somebody has $100,000 of W-2 wages from their self-employed business taxes and S corporation. Let's say they're under 50. Let's say they don't make contributions to another plan, like a day job plan. For 2025, they can make a $23,500 employee contribution on a pre-tax basis. That provides immediate income tax reduction benefit. They can make an employer contribution of 25% of their W-2 wages. That's another $25,000 of pre-tax contributions. And then they could do the difference up to $70,000 as an after-tax. So it's that blended approach, combining the immediate tax savings with future potentially tax-free income. Likewise, from an investment perspective, you might take a blended approach, right? You might have a brokerage account where you've got your brokerage type investments, but then have additional accounts, maybe at a bank or at a cryptocurrency exchange, to make those alternative investments. It could be a real estate rental property, it could be crypto, it could be a private equity, it could be precious metals. So you really get that maximum amount of diversity in your solo 401k investments. So in sum, the solo 401k provides high savings potential, right? It's got the highest contribution limits for any defined contribution plan. A truly self-directed solo 401k plan also is going to allow for multiple types of contributions, whether it's pre-tax or Roth or mega backdoor Roth. A truly self-directed solo 401k plan like the one that we offer also offers maximum investment choices that are allowed under the rules. So you can also achieve that investment diversification, meet those investment diversification goals. Well, thank you so much for the opportunity to discuss. We've got some other comments. We'll take a look at those. We also want to just quickly highlight that we've got a community where you can continue the conversation. We've got over 30,000 members in our community. It's totally free to join. All are welcome. You can join easily at mysolo401k.net/my community. We have a library of videos and webinars on there. So please don't hesitate to join. We also have daily Q&A sessions. So if you subscribe to our channel, you'll get notifications of when we go live, whether you're watching on YouTube or LinkedIn or X or Instagram. Also, if you do, please like the video. That'll help us get the word out to other self-employed individuals, other solopreneurs just like you. So that'd be great if you could also like the video. We would appreciate that. Okay, we'll shoot you an email to see if we can find a time to squeeze you in. Thank you for sharing that. In a solo 401k S Corp, can the 25% employer match put me over the W-2 wages as long as it doesn't go to the overall limit? If not, why not? It's an employer gift. Why does W-2 matter? So first of all, in the context of a solo 401k, employer matching contributions don't apply. It's profit sharing contributions. And really, number two, the self-employed individual is both the employee and the employer in the words of the IRS. And one can't save more than you earn. In other words, the total amount of contributions, whether they're employee or employer profit sharing or voluntary after tax, the sum of those contributions cannot exceed the lesser of the self-employment compensation or the overall limit. So in the context of a business taxed as an S corporation, it cannot exceed the W-2 wages. Hopefully that helps. Appreciate that good question. All right, well, it looks like that may take us to the end of the questions for today. We appreciate the chance to discuss these topics. Please continue to engage. Please subscribe to the channels. Please join the community. Lots of opportunities to learn and to share the knowledge. Thank you so much, everyone. Take care.